So the day has come. The Fed has increased rates by 75 basis points. That is 0.75%, guys.
Just the beginning.
We knew this was happening. This isn't a surprise. We have 3 more Fed increases happening this year. So it's not a big surprise, but what was the surprise is they increased it by 0.25%. So instead of doing 50 basis points, they did 75 basis points. What are the implications and what does this mean for interest rates? Well, let's take a look at interest rates right now to see what happened to interest rates. Right now, a 30-year fixed mortgage is 7.168%, guys. So just yesterday, it was at a 6.8. Now it's at a 7.1. Now, we haven't had time for things to really, make sense and settle down when it comes to these interest rates. We haven't had a chance for that to happen, but I can promise you will see increases in credit cards, car loans, mortgages. This is what you will see. My name is Orlando and welcome to my channel. Let's jump right into it, guys. It says the Federal Reserve raises interest rates by 0.75%, the most since 1994, amid efforts to slow inflation. Now, we know we have to slow down inflation, guys. Inflation is eating us alive, and the Fed will do whatever they have to do to get rid of inflation because they know inflation will take us down a path of a depression. And we don't want that. We do not want a depression. No one wants a depression. I know a lot of you guys are out there want the housing market to crash so that you can buy homes, so you can get into an affordable home. But no one, and I promise you, no one will want a depression, guys. We do not want that. The Federal Reserve on Wednesday raised interest rates by 0.75%, the largest move it has made in a single meeting since 1994. The central bank messaged that further interest rate hikes will come this year as the Fed leans on higher borrowing costs and dampens demand and work to slow faster than expected inflation. Overall, economic activity appears to have picked up after edging down in the first quarter. The Fed's decision lifts short-term borrowing costs to a target range between 1.5% and 1.75%. Like I said, guys, this is very, very, very important. And the reason why this is important is because the Fed was doing anything it possibly can to get rid of inflation. We know with inflation, right, we're at 8.6% based on the CPI report. And here's my thing. I think we're a little bit higher than that, guys. I think we're higher than 8.6%. But that's neither here or there, right? But the point is that we have really high inflation in grocery bills, gas, labor costs. Everything is high right now. And we're starting to see it in the marketplace. We see it in stocks. We see it in the housing market. We see it even in crypto where it's getting destroyed. I mean, I know it kind of bounced back up, but it's still by like, I don't know, don't quote me on this, but it's like 60, 70% cut in crypto right now. So those guys are getting slaughtered right now. But it's all because of inflation, and we want to get this down. And so the Fed is going to continue to raise rates. And you guys know, if you've been watching my videos, you guys know what I feel about this. I feel that we're going to continue to raise rates, and we're going to get into the double digits. I mean, right now we're at 7.1%. Now, if we have 3 more increases, where are we going to be, especially the closer we get to the holidays? It's going to get insane, guys. It's going to get crazy. But before we jump into this, 86% of you guys aren't subscribed to me. Why aren't you subscribed to me?
Just do it!
Please subscribe to the channel. It really helps the channel out. It pushes me out to more people. I love to give you guys this information. Go ahead and subscribe. Now, I know a lot of you guys think, that, especially in my comment section, I see some of you guys saying that you don't think a recession is going to happen. You do not think the housing market is going to crash. You believe that we're going to continue to see appreciation on homes year after year after year, and a recession will not happen because low inventory will cause us to all be rich off of appreciation when it comes to homes. Well, I understand that. I understand why you think the low inventory will help, but we're starting to see creeping inventory happen month after month after month when people are deciding not to buy homes. But The Fed believes that we have to do a delicate balance. The government is thinking we're going to have to reset the housing market for you to get into a house. But hey, look, you don't have to take my word for it. The Fed said it himself.
You know, I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels.
Now, what did the Fed mean by that? Why did he say
you need a bit of a reset?
Well, from the very beginning, the Fed has decided to continue to raise rates to slow down spending, right? Slow down demand. They need to do this to control inflation. So remember, they are raising interest rates so they can slow down demand and spending. But they have to do so delicately to make sure that they don't put us in a recession, which is not going to happen. They're going to put us in a recession, but they're trying to do this delicate where they can bring down inflation, but they don't put us into a recession. But like I said, he is saying that for that to happen, he wants to get interest rates down to what? 3% back to where it was, to do a reset. So he wants demand and he wants supply to be great, and he wants to be able to offer interest rates at a low 3-4%. So he is telling you guys, he is telling you his plans on trying to do that he is trying to reset the market, reset the housing market, guys. So what does reset mean, guys? Reset means that he's trying to get prices back down to a certain level, affordability. He also wants demand to be there, and he wants supply, and he will give you guys the 3 to 4% that you guys want. But I know what you're saying. Orlando, what do we need to get that? How are we going to get that? How can I buy a house that I want and get the 3 to 4% interest rate that I'm asking for? Patience. We have to see how this all plays out, and the Fed is telling you his plan of what he is trying to do. And with that being said, we just need to have patience. The blueprint is right in front of us. You have to look at this information that I'm giving you, where he said, where I cut out of all the stuff that he said, this to me was the most important thing that he said. He is saying he wants to reset the market. And reset means starting over, guys. So millennials, anybody who wants to get into a home right now, patience is the key. Now, how can we understand and how can we get a grip on if this plan is working? Well, as soon as the news hit about the Fed increasing rates, we started seeing job losses starting to come down the pipe. So we see real estate firms Redfin and Compass shed jobs as housing market slows. Redfin and Compass know. Now, once again, these are housing market type of jobs. They understand with increases in interest rates, the housing market is going to slow almost to a still, where individuals will not want to get into this housing market. Individuals will say, no, thank you. Two real estate brokers firms said on Tuesday that they were laying off hundreds of employees as rising mortgage rates and housing prices cool for the housing market. So remember, guys, interest rates go up, prices come down. Remember that. Interest rates go down, prices go up. That's the way the market fluctuates. Compass is laying off 10%, approximately 450 employees. Redfin is cutting 6% of its workforce, which is 470 people by the end of this month. Both companies cite wavering demand and slowing economic growth as a driving factor. We're going to see this with a lot of companies, tech companies. We're going to see it with other housing type of jobs. But the main thing we're going to see is it's not going to be the low tier jobs, guys. It's going to be these executive jobs, these jobs where people are getting paid good amount of money, 60, 70, $80,000 jobs, those type of jobs are going to get cut. The high quality jobs we're going to pull back. But jobs like working at Lowe's or any of these service industry jobs, a lot of labor jobs, those will still be in high demand. But we do know, based on numbers, that a lot of young people are not looking for those type of jobs. We know that a lot of people in general just aren't looking for those jobs. They want the high pay, high executive jobs, which I understand, no biggie. But the problem is that we're going through economic change here, and those jobs will get shed first. Because remember, if you cut $480,000 jobs, that's better than cutting $40,000, $30,000 jobs. You know, so that's what's going to get cut, guys. It is what it is. That's what happens when we have a recession and we have an economic downturn. Shares of both companies fell in trading on Tuesday about 5% for Redfin, and then Compass shares fell 10.5%. So not only are you seeing companies' shares fall, their value fall through stocks and whatnot, but you're also seeing that with that, they're cutting jobs, guys. So be wary of that. If you are trying to get into this housing market, guys, it is best to stay out of it and watch the prices drop, watch the demand dry up. And I'm hearing from a lot of investors, maybe not the big corporate side, but just small investors buying apartment complexes and duplexes, that if the deals aren't available, if it doesn't make sense, they are saving their money and sitting on the sidelines. So I am suggesting that everyone do the same. Sit on the sidelines, wait, go ahead and rent. Don't waste your money by overspending. Do not overpay for these homes. You will see price cuts, but they have been overpriced to begin with. You're getting a discount on an overpriced home. Wait till we hit a recession and then the real deals will be had. But once again, guys, I hope you got great information out of this video. I need you to watch this next video here. It will help you understand everything about this crazy housing market and jump into your first rental property. Also check the description, guys. It has a bunch of useful links for credit reports and join our membership program. I will see you guys in the next one. Thanks.